Hello, everyone. Uh, Good evening. It's evening from Australia, and I'm sure it's morning in places like the UK and early morning for those in the Americas. So thank you and welcome to the 3 day challenge. So, over 400 of you have registered to be part of this event, and I'm so excited to be doing this. And I'll share a bit about why I've decided to start this challenge and what we hope to achieve together over the next 3 days. But first of all, I just want to thank you, and I've got confirmation that all of you on LinkedIn can hear me and can also see me clearly. So my colleague Chinwe is supporting, and she'll be in the comments. If you have any comments, put them on LinkedIn. I'll get them here on the streaming platform. But again, welcome. Thank you so much for joining. So over the next few minutes or so, I'll plan to just run you through some of the events that we'll attempt to get to by the third day. But before we go on, I just want to first do some introductions first. So it's a 3 day challenge. You know why we're here. It's the ISSB challenge. For many of you, you're across the new standards that have been issued by the ISSB, which is the International Sustainability Standards Board, which was formed by the IFRS Foundation about 2 years ago. So they released their first set of standards. It's 2 standards, but I tell everyone it's going to grow. So if you know anything from the journey that IFRS has been on in the last 20 or so years, you know that the ISSB has its work cut out for them. Yeah, so this first new set of standards, the IFRS S1 and the IFRS S2 are the first in the line of more standards to come. And so the focus of this 3 day challenge will be the ISSB standards. But more importantly, we'll touch on other jurisdictions. So, in the EU, they've got their own European sustainability reporting standards, as well as the CSRD, the Corporate Sustainability Reporting Disclosures Directive, which is also effective from next year, but for periods in 2024. In Australia here, where I live, and I'm reaching out to you today, we also have our Australian Sustainability Reporting Standards, which are expected to be released sometimes this quarter by June for implementation from next year. So around the world, China just released its own ESG directive. So 3 stock exchanges, the largest stock exchanges in China, have agreed to have an ESG directive. For those of you in Canada, last week or so, you had your own Canadian sustainability disclosure standards released already. The UK is going to support the ISSB. For those in Nigeria, you have a roadmap already. Brazil, Mexico, and all of those countries. We try and get to them along the journey. But without much ado, I want to progress today with the agenda. So I'll do a brief introduction and also try to just set some housekeeping rules and give you an idea of why I've decided to put this together for you. And for today, the agenda for today, I would want to set the stage because I know many of you are accountants. This is targeted for accountants. I know there will be risk and sustainability experts and some investor relations and what have you people in the room. But the focus is for accountants. So I know that for most of you, you're not across sustainability. So I'm going to start today by just setting the right foundations and bringing you on that journey from what you know already, from elements of your financial reporting, from conceptual framework, and to things like materiality and all of that, and introduce you gradually to this whole new world of ESG and sustainability and net zero future and what have you. And so today also I'll touch on environmental considerations and social issues, as well as corporate governance and accountability, and also touch on sustainability pre the ISSB. We have one of our experts in the room today, Ana Maria. She's from Romania, and she's going to give you some of the insights around what's happening in Europe. So the European Union has been ahead even before the IFRS Foundation set up the ISSB. And so Ana Maria will come on board as soon as I'm done with the introduction to just give you a flair of what's happening in Europe. Don't worry if all of that is complex. Like I said, as we progress over day 2 and day 3, you'll be able to analyze that yourself. So in terms of introductions, a bit about myself. Many of you know me from ACCA and other places or the big four firms, but I thought I'll just give an idea of who I am and where I've been on my journey, my career. So I'm the CEO of Rubicola, and Rubicola is a green finance advisory group. We're the first to be accredited by CBI. CBI is an investor group based out of London with the ambition to raise over 100 trillion to address climate issues. So Rubicola was the first in Africa. We're also accredited for Asia Pacific and other parts of the world, but it's important to know that we're the first firm in all of Africa to be a verifier. So we also do, advisory, assurance around green bonds. Some of the first green bonds issued around the world. I'm lucky enough to have worked on those projects. But in terms of my background, I started in Big Four accounting. I've worked for all of the Big Four firms in Africa and here in Australia. My last role was as a director with Deloitte here in Australia. And so that's my experience. I've also been lucky enough to lead the accounting profession as a president for ACCA. ACCA is the largest global accounting body. In 2022, I was elected and I completed my term some years ago. It's key to note that I've been on this journey, not just with ESG, but even with IFRSs. So about 14 years ago with PwC in Africa, I helped a number of entities move to IFRS for the first time. That's important because when I also moved to Australia, it was when you had the new standard. So many of you accountants in the room will understand that we had the trilogy of standards, right? 15, 16, and 9, financial instruments, IFRS 9, 15, revenue, and leases. And so, just helping the ASX, that's our listed entities here in Australia, implement and transition to those standards. So I'm bringing to the class today experience of financial reporting. I haven't worked on IFRSs around the world. But more importantly, over 10 years ago, I started investing in sustainability, been to the likes of Harvard for executive programs, Wharton. I've also done the GRI, which is that's the largest guidelines or standards being reported around the world in terms of sustainability. So I'm bringing that two arts into the room. And that's what you see. A number of the trainings that is around, it's either teaching you to think like a sustainability expert without bearing in mind that you are coming from a different background. And a number of you do not really appreciate some of the soft issues that do not have to do with financial disclosure. So I'll bring that into the classroom. I'm a FCCA. I'm also a CA here in Australia. I'm a certified internal auditor. I'm also a member of the Australian Institute of Company Directors. To be joining us on this challenge are two amazing ladies. You've got Anna Maria. Anna Maria is in the room already. She's in background. She'll be joining shortly. And she's bringing that experience from Europe. And so she'll touch on quickly, just give you a flair of what's happening in Europe in terms of the European Sustainability Reporting Standards, which, like I mentioned, are effective from next year, but for reporting periods of 2024. And she'll also touch on the CSRD. Louise also will be joining us, but she'll be joining tomorrow. She's coming with the IFC lens. And so she'll be touching on climate finance and why all of this is important. So if you're reporting on all of this, how does it help you diversify your sources of finance? How does it help you attract alternative sources? So if you're working with public sector and with governments around the world, thinking of extra budgetary means to address some of the social issues. So she'll touch on climate finance tomorrow. And I thought I should just put up those CVs there. So where are we going with this? I think it's important to note that first, you've got the challenge, the 3 days, and it's for accountants, it's for risk specialists, it's for sustainability and investor comms people, and anybody that will be interested or involved in the process of financial reporting. So that's who this challenge is for. But it's not just a one-off occurrence or event. We plan to grow a community. So we've created a LinkedIn group already. Why do we need a LinkedIn group? So all of you, 400 plus of you, would get an invite, but I'll also put up a barcode and you can join right away. What we're going to do in that community is going to be peer support. So most countries will start implementing from this year for early adopters, but from next year you would expect, and we'll come to that, you expect most countries around the world to start moving. You will need support. What do you need to disclose? If you're thinking about interim report, what should go into your report and all of that. So the group will be for peer support. You can ask questions from your peers. I would also be checking the group every day to see if there are things I can attend to myself. I would also distribute relevant toolkits and templates. So there's a lot out there. There's a lot of templates and guidelines going out there. But which one is relevant for you as an accountant? And so I'll do that work for you and put out some of those toolkits. Some of them, a lot of them are free to help you know what's available to help in that regard. And discounts to in-person training events and paid online offerings. So I'll be going around the world, a mini tour, just helping people around the world. Also, I appreciate this. So I'm starting first with East Africa next week. And we've got a whole big training there that is happening both in person and online. And hopefully, you know, as I move around the world, I'll be able to get discounts for you with all of the organizers that I'm partnering with, so that if you intend to join those in-person events, if it's in your city, there can be discounts to you. Or if they're paid online offerings that I'm providing, you can also get discounts as part of that community. Thought leadership. So I plan to release a newsletter every week and on topical issues. So just helping you on that journey to appreciate what ESG is and ISSP, what's topical, what's happening around the world. So I plan to publish that. So if you're part of that community, you'll be able to get access to these email newsletters, and you get them from our team. There'll be engagement. So I'll also be bringing into the room, you know, experts from around the world. Would have LinkedIn Live like this every fortnight. So every fortnight we'll be there to network, to talk about issues, to bring people in communities, CEOs, CFOs that are implementing this, to share their journey with you, early adopters around the world, to tell you what are the key issues, the data, and what have you. And academia. So I'm doing my doctoral research here in Australia, and I'm working on climate risk. So this is very important to me and many academic professionals around the world. So I intend to bring them in. So that's all of the experience that you benefit. So what you have to do for me right now is to bring out your phone and try and scan the barcode or go on that link. It's the LinkedIn community, and I want you to just join now. So I'll leave that on screen for another few seconds. So I hope you can see that clearly. If you scan that, that's the fastest way to get in the group. It's a private group, so we'll still need to accept you back in, but you need to do this. So as many of you as can scan the barcode or type in the link there, it will take you into the LinkedIn group for this community, and you can become a member of that. Like I mentioned, everything we're going to do is going to be within that closed community. Okay. Thank you. Yes. Hopefully there are no questions. If there's any questions, Chinwe, please drop them in for me to see. Or if there's any comments you want me to see from the general comments, I'm not looking at that right now. So if you can help me just put out in the private comment, then I'll see that. Thank you. Okay, so I hope you've had a chance to just scan that. I'll share that on LinkedIn later on for you, but I want us to get going. Okay, before I introduce you to ESG, I'll probably use this opportunity to bring on Anna Maria, and I'll just just give you a sense of what's happening in Europe. So just give me a second and I'll bring Anna Maria. She's under the weather, and so she will not be able to come on video, but she's agreed to still be part of this event. So give some support and welcome to Anna Maria as she takes on the stage.
Hello, everyone.
Yes.
Can you hear me? Well, hi.
Yes, everybody can hear you. Yeah.
Thank you, Joseph.
Yeah, thank you.
Thank you for the invitation and for this great event. My name is Ana Mariescu. I've been working in finance for 20 years. I'm based in Romania, in Europe. And currently, one of my responsibilities is to implement the European Corporate Sustainability Reporting Directive, or in short, the CSRD. And this implementation is mainly from a finance perspective. As Joseph also mentioned earlier, this is a mandatory legislation and is applicable to European large entities and groups starting with financial year 24. And it will bring significant changes into how companies report on ESG matters. And for today, I want to share a bit from my experience in working with the new legislation, and in particular share some views regarding the role of finance in this, the collaboration needed between various functions, and how can finance take this, I would say, incredible opportunity to become a trusted partner and add value to the organizations when it comes to sustainability matters, which is an area that has not traditionally been covered by finance. So if we look at the slide, one of the ambitions of the CSRD is to bring sustainability reporting at the same level as financial reporting, and also to have this externally assured. And this is a big ambition if we look at how many companies used to report their ESG data in the past. And if we are to look simply at the tools we use to support reporting, we can see that for financial data we use for many years ERP systems, sophisticated reporting tools, while in the non-financial data many companies still rely on Excel spreadsheets and emails as their data collection. And also the recurrence with which the non-financial information is collected, it's much rare. It's only maybe once a year. So if there are auditors in the audience, they could confirm that having sound controls in an Excel data collection environment could be rather challenging. So it's becoming quite clear that the current reporting process is time consuming, and it's not sustainable on the long term, especially given the numerous disclosure requirements which are requested by the sustainability standards and the European sustainability standards in particular, and the need to have this information finally audited. And finance can have the opportunity to support, to digitize and automate the reporting processes, and to bring controls to verify the accuracy, completeness of the data in order to ensure data quality, and in short, to bring the same rigor and discipline in reporting the non-financial data to the level we have now for financial data. CSRD also introduces the concept of double materiality, which means that we are no longer looking only at the impacts perspective as we used to do in the past, but also on the actual and potential ESG risk and opportunities and their financial impacts. So when we talk about financial impacts, we need to look even beyond what the accounting provisions reflect, and also to make the link to the annual accounts whenever it's possible. And the way to achieve this is for finance to work closely with the ESG strategy and risk management teams to understand the company's environmental, social, and governance impacts and ambitions, and in turn to educate the sustainability teams on the related financial implications of risk and opportunities, and basically to work together to translate the strategy into a format that can be then monitored and acted upon. Also, CSRD requires companies to disclose information on topics like ESG governance, strategy, management of impacts, metrics and targets. And much of these concepts are already covered by finance, however, in relation to financial KPIs and general business risk and opportunities. And ESG risk and opportunities are no different. They need to be integrated into the overall process and overall strategy in the same way as any other aspects. And finance is best placed to support this transition. These are just some examples of discussions finance could have within the organization with various stakeholders, given the growing demand for non-financial information, including ESG, and the aim to produce this information that is clear, transparent, with high quality data and using robust and reliable processes. And if we look historically, business success has been measured mainly in financial terms. In all business reviews, the majority of the discussions focus on sales, profits, margins, And while these metrics remain very important, they need to be complemented by non-financial indicators such as carbon footprint or employee well-being or community impact. And we are already seeing the first companies reporting under this directive. And it's quite interesting to observe how well the financial and non-financial data complement each other in articulating the company strategy and vision. And I would really encourage everyone to look at this, as there are already some very good examples published. So other questions which we could ask as a finance professions are around topics like what is the return on investment on sustainability related initiatives, or how do I know I'm making a decision that it's in the same time driving profit and sustainability. So these are some areas where we as finance profession, we could add value, starting from operation perspective, the reporting, the quality of data, measuring and monitoring, and going forward to strategic partnership. And to conclude and reflecting on all this, I think we should really take this opportunity presented by the corporate sustainability reporting directives and other sustainability standards and become a change agent within the organization and evolve and complement the ESG teams by bringing the years of expertise to an area that is now rapidly evolving. Thank you so much for listening, and I hope you enjoyed the rest of the session. Joseph, back to you.
Thank you, Ana Maria. Thank you so much. I know for many in the room and on the platforms, you're like worried about, oh, where do you need to start? Don't worry about that. I think the key thing is to understand, to give you that insight from around the world. So Ana Maria, thank you so much. I know you've not been really strong and you've been under the weather, but you made time to still attend. So thank you so much. And I'm sure everybody, I can see the claps and the celebrations from the comments. So thank you so much for your time today. So, and I know a lot of you have asked questions around, oh, will you get the slides and can you get CPD for the content of the training? So the team would have either sent you an email already to answer those kind of questions. So if you need the slides, or if you want certificate for this, you can obtain all of that for a fee, and there's been communication to address that. But in terms of just going on and just continue on that agenda, if you step back and look at where we are today, so the idea of ESG is not totally new. You know, I try to bring the accounting lens to this. So if you step back, you know, in the 1960s and in the industrial age, when accounting was growing and all of that, it was about the balance sheets, right? You know, you had all of this heavy equipment, the rail industry were coming on board, locomotives and asset-intensive industries. It was just more about the financial profit or loss and balance sheet, asset liabilities. But as companies began to grow and investors became more diversified, not just mom and dads or owner-managed businesses. When corporations started to form, there was a need to think about employees. Think about the mining companies in places like Australia and Africa and South Africa, and all of the risk that people go through. Miners, accidents and fatal accidents and all of that. And so employees started to agitate for more disclosures from organizations. So what are you doing in terms of health, and all of those things? And so there had to be management disclosures started coming in. So the write-ups that you see in places required now, in places like the US, where it's not just the numbers, you need to tell that story. And so that started to come in. And that's how ESG and CSR began to evolve over the years. And those of you that are asking, what's ESG? It's just an acronym that is now widely accepted to denote sustainability. It's environmental, social, and governance. There's some slight differences between ESG and sustainability, but I won't bore you with that. ESG and sustainability are usually used interchangeably. And so if you think about all the KPIs or impacts that your organization can have on the environment. So if you're a mining company and oil and gas extractive industries, that's easy to know. You know that you've got all of this, you have all of this in accounting. We call it obligation, right? Asset retirement obligation, constructive obligation to repair the environment back to where it was, so you can understand that. But there are also subtle environmental impact. If you're in the financial service industry, if you're a bank, you're an insurance company, an asset manager, there's an idea of scope 3, scope 3 emissions. These are, all of the instruments, the financial instruments you give out. So the loans you give to the mining companies, even though you're not a mining company, but if you're a bank and your customer is a mining company, then you have all this, what we call financed emissions. And so you need to think about that. And that's becoming, a big issue. The US recently released their SEC rules around climate risk. That has been retracted. There's a lot of noise happening in the US. We'll come to that later. But, the US intentionally left, they didn't make scope 3 mandatory because that's a really complex area, even for people that are companies are already reporting on ESG. So environmental is big. Social issues are also becoming so critical. So if you think about it, if you're a fashion company, a Louis Vuitton or a CK or DKNY, all of those brands, and you've got factories in Bangladesh, you've got factories in India, all of those places, you need to be sure about the supply chain. Who is working in those factories, right? Are you using children? Are you using women that are not paid the right amount of money? Fair wages becoming really critical. And so you have also, chocolate, companies like Nestle and Cadbury in places like Ghana, where you have all these cocoa farms and children are working there. Or if you're a tech giant like Apple and Samsung, and the parts that are required to make your iPhones and Samsung phones come from, war-torn regions like Congo, and all of what's happening in the Congo and all of that. You need to think about the social impact that your organization is having. And governance is also very big, right? What are the governance arrangements? How do you have your governance structure set up to deliver on this non-financial reporting? So who is responsible for what? Does the board have the right level of oversight? Do you have a chief sustainability officer? Do you have someone that is delegated to act as such to be able to help the board navigate that? Do you have a committee? Or is this, all of these functions, has it been subsumed into the audit or risk committees? Those are things you need to think about as an organization. So that's the whole concept of ESG. It's not new. You probably already have like a sustainability reporting team within your organization currently, or you have your risk function. If you're a bank, most of the risk functions in the bank are dealing with this, or internal audits are across this. All of that is not new. What is new is that as accountants, as finance professionals, we're now going to be charged with thinking about the whole concept of ESG and how that relates to financial disclosures. And that's why we are in the room today. So in terms of the environmental considerations, I've touched on emissions and global warming, but there are also issues around health impact. And you've seen demonstrations the world over, in the last 5 years, even before COVID. You've seen how young people have taken to the streets to demand to hold to account organizations, the very big organizations here in Australia, organizations like BHP, but not just BHP, around the world. If you're in places like Nigeria, where I'm from, we've had a lot of oil spillage in the South, and it's affected livelihood of people there. We can remember what happened in the Gulf of Mexico with BP and all of those major organizations. And it's cost them to now rethink their strategy. So I think the big thing there is, if you're a finance person and you're thinking of future cash flows, discounting of future cash flows, and your organization is going to have what we call stranded assets. So if you're in the oil and gas company, companies like Total had to rethink their strategy. Are we going to be an oil and gas company, or is it better to start transitioning towards gas? Because we know that gas is still, very much in the mix. And so that, the impairments that we expect to have, if all of these assets, you've invested billions of dollars on oil rigs, and if in the future, nobody's going to use them, what happens to those assets? And that's why, as accountants, it's beyond just thinking about implementing these new standards. It's about connecting the dots. It's about bringing everything together. When you're thinking about your impairment, which is IS 6, a totally different standard, which is not even the ISSP, IFRS S1 and S2. How do you connect the dots? How does your forecast
if you're in public sector and you're doing all of these budgets for the government, how do you ensure that all of this talk to each other, the financial and the non-financial? Insurance, it's a big sector here. You know, it's going to be impacted. So if you think about all of the countries on the coast, so in Australia and Asia Pacific, we've got all of our neighbors, Solomon Islands, all of those guys. They are literally facing all of that. You know, I was in Caribbean last year, and countries like Barbados, Grenada, you know, they're all on the coast. It's going to be huge impact in terms of all of these beautiful houses. If you live near the lake or, you know, close to the ocean, they're now huge risk. So if you're thinking about premiums, right, for you know, home insurance, you have to capture all of this data in to be able to calculate those premiums. So everything is changing because the environmental considerations now have real impact. And we've seen that with the tsunamis, all of that. And last year alone, we saw what happened in places like India, you know, Pakistan, all of the floods and, you know, fires in Australia here 2 or so years ago. But in California, in South Africa, there's been droughts over and over. And in many parts of the world, you know, Lake Chad in Africa shrunk to less than, you know, 10% of what it was about 40 years ago. So these are real issues that as accountants, we cannot leave to only climate activists. We need to start thinking about that. We need to start developing the financial models that would help us bring this into real figures and present that to investors or our communities as well. When you think about corporate governance, so, you know, corporate governance, very, very important. Around the world now, there's a whole talk on, you know, board diversity. So it's about, you know, ensuring you have diversity of ideas. But more importantly, most boards are now setting the setting quotas, right, for the amount or the percentage of female representation. So bringing women on board to create that diversity and you know, other genders, right? We've got a lot of genders right now in the world, right? Bringing everybody to the table. So there's that concept of thinking about diversity, and this relates to the social issues. So if you think about ESG, so the S there is social inclusion. And so in terms of governance, you also need to have, you know, that diversity at the board, because if you don't lead, if you don't set the tone, the right tone, that it would impact, there's a ripple effect down the organization. There's a whole concept around transparency. So independence and ethical considerations, conflict of interest. We see that every now and then, you know, in the US, with some of the cases there with Trump, we've seen how conflict of interest has impacted some of the considerations there. There's been global codes around this. So in Europe, for those of you that are joining the live event from Europe, you're already on with the Anti-Slavery Act, and not just in Europe, right? Many parts of the world, because of globalization and the fact that many of these organizations also are present. So in Australia, even Australian companies would typically report using that Anti-Slavery Act. And I know also in Africa, a number of organizations are also, adopting that. And you know of things like the UN Global Compact, there is the UN SDGs, and many of these global codes have a whole big concept around social. And you need to think about social from the impact you make in the communities where you operate. So if you're a football club and you've got a stadium somewhere, you know, noise pollution and what have you, right? If you are, you know, say an oil and gas company, right, or an extractive player, you also have the issues within the communities where you operate. You need that social license. If you're a mining company, you need to get the social license, the social credibility with these environments and communities that you work in. So when you also think about the rules-based versus principles-based. So for us as accountants, when we think about rules-based, we think about, you know, the US with Sarbanes-Oxley, or, you know, places like Japan, or, you know, in Italy, with, you know, in Milan, and some of those places where they've got their own version of rules-based, you know, SOX-like regulations. Whereas for those of us in the UK and other parts of the world, usually it's principles-based. So the idea behind some of the standards we're seeing right now is principles-based, because it's just to get everybody on board and to bring everybody together. Usually when it comes to CSR, it's largely been, you know, voluntary before the ISSB came in. So this is ISSB. Most organizations reporting CSR, it's largely been voluntary, and you can pick whatever code. Most times it's not audited. A few have been audited over the years, and there's been issues with this, issues such as greenwashing and all of that. And I'll come to that in a bit. But, you need to think about all of that consideration. How do you, as accountants, we're always thinking about accuracy, completeness of data. And so when you come into this new world of ISSB, IFRS S1 and S2, like Ana Maria mentioned earlier, it's going to be about where's the data coming from. And so, as a finance function, you're used to having control over your data, your receivables, your assets register, payables. You have, designated experts working on this, and you have some level of oversight. Now you're going to need to work with risk experts. You're going to need to work with the engineering facilities team, which might be outside of your control or purview. It's that leadership. So I believe that finance has to play that leadership role in ensuring that all of the organization, right, is responsible for accuracy and completeness of data, right? Because if all of this is going to flow into the financial statement, and you will need to get auditors, verification, or risk experts, provide some form of assurance. It might be agreed upon procedure, it might be limited assurance, reasonable assurance, what have you. So the standards, the reporting, auditing standards and assurance standards are also being developed right now as we speak. So all of this is changing so rapidly as we speak. So you need to think about that. If you're a CFO here on the call, you're a financial controller, or you're just a finance person, think about your career and how to ensure that you have employment opportunities. This is a time where there's need for experts in this area. And so all of the development and investment you put into yourself would be very valuable as we go on. So you also need to think about, we talked on women and children earlier and supply chain issues. Supply chain is very, very big. If you're in the retail sector, fast-moving consumer goods and all of that, it's even very, very important. When you think about vendor, and I know in finance, it's all about, vendor authorizations. You want to be sure that you've got validity over the list of vendors, so that when you're doing your payables, you're sure the monies are going to the right places. There's more to think about now. It's not just, having, that oversight and control and risk and controls, over the payable function or vendor list. It's now thinking about what can go wrong in your supply chain. What can go wrong in your supply chain? So I mentioned all of these global brands, right? Most of them registered in the US, Apple, Samsung, and the likes, right? Or in Europe, Unilever, all of these guys. The fact that the risk that you're looking at might be outside of your own immediate scope. So the risk might reside with a third party. And we've seen this over and over with Nike in India, with Coca-Cola, and all of these brands, and many case studies to tell you that, the risk that you face as an organization in the era of ESG might actually be totally outside of your immediate defined organizational structure. So if you've got a group structure, in accounting, you've got the parents, subsidiaries, associates, and all of that, joint ventures, all of that, right? It's easy from an accounting lens to say, this is what we're thinking about. But the challenge now is that when you think about non-financial disclosures, you need to think outside of that box. So your risk might be a vendor somewhere that's providing services for you in a developing economy where the rules are still, not as developed as, where you are in an advanced economy. But it could be that exposure point where you can be exposed to regulatory fines. And we've seen that here in Australia, where Australian banks, not one, not two of them, have had to be fined by the regulator because their controls did not pick transfers that were done to exploit children, sexual exploitation of children. In other parts of the world, it's been sending funds to potentially terrorist organizations. So some of those things that you might not have looked at before are now beginning to come on the radar. So supply chain, very, very important. Employee issues are also critical. And you've seen that around the world. It's been around, when the Black Lives Matter and all of that thing came up, racism is brought to the fore. And you've seen how, from Starbucks and all of these brands, they've been exposed. Why? Because, either employees do not receive the right training, or employees do not follow, what is perceived by society to be the code. So even if you don't, some of these things, these nuances might not be enshrined in a code of conduct, but the expectation is changing. The expectation is shifting. It's not just what you've enshrined in your policy, it's what your stakeholders, not just the shareholders, right? So in finance, we're thinking about shareholders because they provide, our sources of finance, either through equity or loans and all of that. But now you need to think about even other stakeholders that might not have any representation on your, either through equity or liability. They don't have any representation in your financial statement, but because they provide social license. Because when they cause, an uproar in society, people begin to boycott your product or services, and that could be huge. And we've seen how all of this play out around the world. So, employees are very critical. Their welfare, mental health. Post-COVID, mental health has become, really top on the agenda. So as an organization, when you think about social issues, it's ensuring that your employees feel supported, that they've got all the support they need to be able to thrive on the job. And when they're struggling, that you also have, plans in place, initiatives to support them to get back to where they need to be. So mental wellness, you need to think about that when you think about social issues. This is just a few quotes that I put on screen there that just gives you an idea of what's been happening in the last 5 years. So post-COVID, there's a lot. And like I said, all of this is before the ISSB, the UN SDGs, 17 ambitious goals. The last one is on collaboration, but 17 goals from education to life underwater to, women, protecting women and children and all of that. And many organizations today are reporting on this already. The challenge for us on the call as finance people is how do we pick all of this data, in many forms or many means, how do we pull that together, relevant data into the financial statement? The TCFD has now been scrapped, but before the ISSB standard, they were the first, to set the scene. It was led by Mayor Bloomberg, the former New York mayor, and they did their work. The task force have now, been subsumed into the ISSB, but they were the first to start thinking about that global harmonization. Because what you find with ESG and sustainability as an accountant is that compared to financial reporting, where you've got IFRSs, which most part of the world, not all countries are reporting IFRS, but we know that most part of the world are now reporting, most countries and jurisdictions report IFRS, right? Some countries are still on the national GAAP, right? And we know that. However, for ESG, the challenge has been that harmonization. So what IFRS was able to do, of course, outside of places like the US with US GAAP and all of that, but we also had the convergence with FASB and IASB working together in, all of the subsequent standards from IFRS 15 and what have you, right? But with ESG, they struggled to have that harmonization. There was, I used to have a slide that there were more than 50 or so guidelines, codes, and frameworks from around the world. And that created, it made it just cumbersome for practitioners. And so TCFD was that first attempt to bring everybody together. But as Anna Maria mentioned, there's a concept of double materiality, and I'll come to that in a bit before we close. I know we still have about 10 minutes to go on the call. TCFD was that first attempt at introducing that. The SEC chair, Alison Lee, mentioned that, acting in pursuit of the public interest and acting to maximize the bottom line are complementary. It's not just the main thing. So it's not just thinking about your investors now. It's thinking about the bigger picture. While the world moves towards a single standard, BlackRock continues to endorse TCFD and SASB aligned reporting. And that was by Larry Fink, and BlackRock. And now, obviously, BlackRock will move on to the ISSB. And this were early, commendation and endorsements around the world just to support the work of the TCFD. FD. This slide just gives you an idea of some of the drivers of change. And over the years, you see for the last 20 or so years, from early 2000s to today, you see how, across industries, how number of signatories to some of the codes have increased significantly. It's because there's been pressure on the financial services sector to act more sustainably since the global financial crisis, where we know it impacted most part of the world. There's been more call for that stewardship to have increased momentum towards the ESG stewardship, and that transition has been going on from time to time. So pre-ISSB, I just thought it would be nice to give this slide. Very useful. Just provide a context of some of the frameworks and their focus. A number of you, if you're in the extractive industry, you used to CDP, the Carbon Disclosure Protocol, and that's very common with the very big entities, like I said, that emit a lot of GHG, greenhouse gas emissions. Very popular. The Dow Jones Sustainability Index, also very popular. When it comes to things around greenwashing and some of the scandals we've had, with Volkswagen and all of those companies, you remember it was the same year where they were voted, top on some of this sustainability index. So there's been a lot of criticism about how valid are some of these claims, that organization, and that also further leads us into thinking about assurance, which I said it's very big. GRI is the very popular one, the most popular of all the frameworks around the world. I think about between 70 and 80% of organizations around the world that report on sustainability or related disclosures actually use GRI. So it's a popular one, for organization. The SASB, Sustainability Accounting Standards Board, was out of the US. Again, that has now flowed into the ISSB. Before I close today, I think I'll just spend some time. If there's any questions, I can take that quickly, Chinwe. If you can help me summarize any questions that you want me to pick. Otherwise, I'll just probably spend some time on this slide because it's very, very, very important. So there's this concept of double materiality. And when you think about that, it's, from in accounting, we say an item is material either by, it could be a material by the amount or by the nature. So things like taxation, like we know, tax is material by its nature. So even if it's a small amount, right, because of the nature, it's material. Also things like bribery and all of that, corruption, no matter how much you pay, with material. Whereas other items would be, they usually set the materiality as you do your audit, performance materiality, and all of that, right, to see how it would impact on decision-making process for users of the financial statement. So when I teach sustainability and when I talk to accountants, materiality is that concept where I try to bring you from what you know to what's new. And this next slide here just gives us a good flow of that. So when you think about financial materiality and double materiality, so when you think of risk and opportunities from not just the financial perspective, but non-financial. And so if you think about the environment, you think about the impact and all of that, then you are considering double materiality. So financial materiality plus non-financial materiality. And so companies must be responsible for actual and potential adverse impact. So when you think about your decisions and the impact will have on the society, if you're going to invest in, fracking technology to extract crude in North America, what impact does that have on indigenous Canadian communities? All of these indigenous communities. Here in Australia, we also have our indigenous communities where some of the mining activities have destroyed, some of the, historical artifacts that have been on for tens of thousands of years. And so there's a social element to that. And that doesn't go well. A company, one of our big listed companies here, at some point, I think the entire board had to resign because, they blew up an historical site while they were trying to do mining, and you wonder, why did this happen? Where did it go wrong? Also, in places like the EU, there's a sustainable finance disclosure regulation that requires disclosure of adverse impact. So when you are going into an investment and you're thinking about, the return on investment, the payback period, as a financial accountant, you need to also consider what will be, the impact of this action and all of that on the society. So investors would usually focus on, the financial gain. And that's one of the criticism about the current ISSB standard, because they've tried to narrow their scope. And so when you think about, the likes of GRI and all of that, where they're thinking about double materiality, and, even Europe, they're thinking about double materiality, the ISSB is trying to define a scope to ensure that, it's more investor-led. So when you think about the ISSB, you need to think about how they were formed. Remember, the TCFD, Task Force on Climate-Related Financial Disclosures, was an investor-led group. The banks, your Bloomberg and all of those big investment banks around the world coming together to take action. So that's why there's a bias currently. We don't know if in future they would align that, but currently there's that bias, and it doesn't think about double materiality. Their focus, the ISSB's focus, is on financial materiality. And I think, if you ask me as an accountant, I think I'm biased, right? Even though I'm a sustainability enthusiast, and I would want the standard to think more around, non-financial issues. You need to start from somewhere. The entire financial statement architecture is built around, financial materiality. So if you throw everything in the air, it might be difficult to reconcile that for accountants and other financial players. I'll stop there for today in terms of the slide, because I know there are a few questions and I'm conscious of time. I don't want it to go past the 1 hour mark for each of those days, because I know you're busy. A lot of you are just starting your day in places like the US and Canada. And I know for those of you in Europe or in the UK, it's about lunchtime, and in Australia is night already. So questions around slides, so like I said, for those of you that might be interested in slides and, also interested in getting a certificate of attendance already, the team would have sent you an email already. There's a process for that, for a fee to get that if you need a certificate and the slide. Another question is around Africa is far behind in both legislation and awareness. How do we bridge the gap, especially from a perspective of multinationals and Africa having some fossil fuel natural resources? So I think, it's, if you look at it from an holistic perspective, the ISSB chair and one of his board members were in Africa. They did an Africa tour. I think they finished a week or so ago. So the ISSB has been on the road, actually, trying to create awareness and all of that. And I know that, Nigeria, of course, I'm a Nigerian. I know the FRCN in Nigeria has released a roadmap, which they're trying to socialize with the accounting firms and all of the other stakeholders, the Accounting Institute, ICANN, ANAN, and all of that. I know in Kenya, they're thinking about it. South Africa is doing the same. Like I said, I'm in East Africa next week, and these are the conversations we're having. So I don't think Africa is behind. If you think about it, most emissions don't come from Africa. So Africa currently do not contribute so much in terms of emissions. Why? Because we've just been backwards in terms of development. However, we've been very, very proactive in coming to the table and engaging on this issue. Another question says, how do you incentivize countries or companies whose major source of revenue is deeply rooted in areas that are not sustainable? It's rethinking strategy. And so as finance people, and that's why this program is for us as finance people, we need to bring on our strategic lens and help our organization. So we know the numbers, we know strategy, we know financial issues. We need to appreciate the ESG component and bring that into the organization. So all of these organizations need to think about transitioning. I told you, Total's been working on this that I know of for over 10 years. I've had some of those conversations with Total in Africa in the past. And I know over the years, they've just transitioned from being heavy into fossil fuel to just being more of gas and all of that. I know Shell has changed some of its strategy also, and they're thinking about themselves, investing heavily into renewable technology. So all of these organizations are in the pace of change. And that's why, as a finance person, you need to also develop your skills and be able to better lead the conversation so that you're not left behind. We're best placed based on our understanding of the financials and also our understanding of reporting lines to the board and to investors to lead this change. So thank you, everyone. I've taken the questions I can see here. Thank you for your time. Same time tomorrow. You have the links already. It should be mostly from LinkedIn, and it's the LinkedIn Live. Thank you for making time. Please share with your community. Share with people, accountants that you know, finance people, or risk experts, internal auditors that need to be on this platform. So I'll see you tomorrow. Tomorrow we'll explore the climate issues, and we'll start looking at some of the standards, beginning with ISSB. Luis will be joining us tomorrow from the IFC, and it's going to be an amazing time. Thank you once again for your time. Please engage. Try and join the group that we have there for you, and I'll see you tomorrow. Thank you. Thank you so much. Bye-bye.